came up for a retest. So now there's a high possibility it's going to continue to move down. Where it's going to move down, it's going to move down to the next support it has. But you know, since there's a lot of momentum in the market, it moves down to the next support down here. Right? This was a very crude example. We're going to move on to more examples here in a bit. Let's see this. Do you draw your support resistance based on the wicks or the bodies or the traffic zone candles? We draw them over the wicks, right? We draw them over the wicks because you got to ask yourself where. Okay, this is the 15-minute time frame. You can see it right here, 15. So now you need to ask yourself, where do wicks happen the most, right? Where do you see most wicks formed? Mostly wicks are formed at support and resistance areas. Can we agree on that? On support and resistance areas, that's where wicks are formed. If you look at this, we have support, and you can look at this. This is where support was as well, right? So now if that was support, and you're looking and you're like, you know, now you're trying to look left, you see that this was the price here, 147,500, right? But does this mean 147,500 is the exact price? No, because there's going to be price over here, there's going to be price over here, there's going to be price over here. So all these prices, this is like a zone of prices. You know, this is like the zone of prices. This is all the range of the zone. Yes, it's a sign that support and resistance holding. Yes, exactly, right? So wicks are formed at support and resistance zones. So we're going to go over a lot of examples here too later on. Okay, let's go to the next slide here. So when you're looking at supply-demand zones, just for the sake of simplicity, just understand that supply-demand zones, support resistance zones, they're all the same thing. They're just different names given to the same concept. All right. So we're going to take a short break, but before we take a short break, I can entertain some questions on psychology, and I can entertain some questions on time frames. If someone wants to come on as a guest speaker, they can come on with their, like, you know, content or whatever they want to talk about. But after questions, we're going to take a short break here. Oh, we have 102 people here today. On the previous chart, would you wait for after that large candle broke up? Which, this candle here? What would you wait for? Basically wait for candles to close, because sometimes, you know, when price is moving high, because, okay, let's say that, oh, 6 a.m. candle. Yeah. Would you, let's see here. All right. Would you wait for after a large candle breakout? What would you wait for? Okay. When this candle breaks up, where's the arrow? Oh man. Oh man, where's the arrow? Okay. So when this candle breaks up and closes, you're looking left and you see, okay, this was resistance formed, right? So basically what you're waiting for is consolidation, because now what you can see is that this was, we had a bearish candle, and then you had another bullish candle, this one, which did not close above the previous bearish candle. And then you had another bearish candle, right? So now what you're thinking is that, oh, hey, maybe this price here, this price level, 147,700, is maybe important, because now price is not being able to break above it. So when it can't break above, it's probably going to break down. Make sense? So, because when you're looking at this information, even if you look left, you see that we had some issues at this price level. You know, so if we had issues once and price came down, we're probably going to have issues again because market is going to repeat itself. It couldn't break up, so where it's going to go, it's probably going to break down. You talked about trading as a student. What tips do you have for university students in the UK trying to trade forex as a hobby? I would say if you're trading, if you really want to focus on trading in UK, and anywhere else, this goes for anybody. I would say take a small course on economics, right, and how markets move, how trades affect economies, or how decisions with interest rates they affect economies. That's something really important that you need to know, because you really need to know what makes prices move fundamentally, right? Like things like interest rates or sales report, retail sales. I know in January we called NFP in January and February based on the fact that, okay, like, you know what, retail sales were down for Christmas because businesses moved towards online sales. Makes sense? So if retail sales are down, there are less employment opportunities because retail sales are down. When the retail sales are down, less customers come in. When less customers come in, companies hire less staff. So that means NFP should be bad, right? So that's something you really need to focus on or study on, that what really makes markets move. Do you suggest to keep support resistance zones drawn on the charts for days? Or yeah, so every time I come to the chart, I remove all my zones and I refresh my zones. I remove all the zones and I only look at the most recent zones. We're going to talk a lot about that later on here in the webinar. Okay. Going back to true ECN versus standard, what would you say true ECN is better for scalping due to those pairs and better execution? Yes, I would say true ECN is better for scalping. I personally like it because it's less spread. Spread is low. So, you know, I basically like it better. Taking conclusion, okay, this Constantine. When price broke two zones, the London session, which zone would you know to take the trade off? Okay, so I guess you're talking about this big move that happened, right? So now what you got to see is that you had resistance here, right? So when this candle closed, you're waiting for the next candle to close too, because this is actually a bad example because it's in the 15-minute chart, because these two candles are one 30-minute candle. So you're basically waiting for the 30-minute candle to close. So if this was a 30-minute chart, you would see a candle close above over here, and then you could base a better judgment based on how it's forming. So we're going to look at more examples there. I'm sure you'll get to this, but the overall approach should be determine bias via daily. Based on bias, take trades in the zones. Yes, the number one would be determine a bias. The number two would be determine a place where you're going to put your stop. We're going to go over that as well in the in our examples here. Okay, awesome, perfect. So we're going to take a 7-minute break. It's 11:21 Eastern. 11:21 Eastern. So we're going to be back at 11:26 Eastern. Big time. I'm just going to get some liquid in me, and then we're going to go towards, we have higher time frames versus lower time frames. We have examples on continuation through zones, new analogies. We have like what happens when price rejects zones. A lot of examples on like like chart cosmetics and looking left and chart traffic as well. So there's a lot of exciting. The exciting stuff is coming now. The previous, what we just did, that was all theory, but this is mostly now practical stuff is going to come on now. So 11:22. Okay, perfect. So we're going to be back at 11:28. We're going to go on mute, and we'll see you very soon. Welcome back. I really needed that break. needed to severely hydrate myself. All right. Let's move along. Next, we're going to talk about higher time frames versus lower time frames, and how the lower time frames overall they make your higher time frames. I think it's very, very important, and most people don't really understand it. Well, they do understand it, but when you're looking at the market, you're not taking that into consideration. And I think that's the number one fallback you have, that you're not taking your high time frame and lower time frames in consideration, right? So let's take this for example. So let's say you have the daily time frame, right? You have the daily candle. It moved like this, and then it moved like this. Now, a lot of people, they must have heard me talk about something called visualization, right? So now let's say you're visualizing the next daily candle. So now when you close your eyes, you're visualizing the next daily candle to go something like this, right? What would this mean on the smaller time frame? On the smaller time frame, this would mean that, candles came down, they made a low, and then they went back up. They went back up, and then they started to consolidate. And then what happened? Price, when the new daily candle started to form, price went up, it came down like this, and then started to go up. Okay, break and retest on the 4 hour, exactly, right? So on the higher time frame, you might see clean candles like this and like this, but the smaller time frame is where you will start to learn market structure, right? Because this wick up on the small time frame is going to be a move up. Like some candles are going to start to move up to create the wick on the higher time frame. And then once they start to go down, because this moved down right here, this is the wick of the previous daily candle. See, it filled this range, continued to move down, went back up to the same area it broke before and closed. So here you have the close. Right? So it's basically you're just visualizing how the candles are moving and how the smaller time frames are gonna make up the overall larger time frame. Okay, let's go to some chart examples here. Raja, can you explain what you and Ted always talk about the 4-hour candles, like how they move in different hours? So how the 4-hour candle move in the first hour and second, etc. So move to expect. Okay. Basically, let's say that you have the daily candle, right? You have the daily candle. So now daily candle, it's going to start to move a lot in, let's say, the New York session, right? And then it's going to start to die down, and then it's going to start to move back in Asian session, right? Let's just disregard when the daily candle open closes. This is just for simplicity. And then it's going to start to die down, and then it's going to start to move in London session. So now okay, there are intervals when the daily candle is going to have some volume, right? New York, Asia, and London, right? So now when you're looking at the 4-hour candle, this is the same thing. So now maybe the first hour, so now the 4-hour has 4 1-hour candles, right? So maybe in the first hour, there's no volume, right? Because maybe this is, let's say this is the 7 a.m. candle. There's no volume. And then you have the 8 a.m. candle of the 4-hour candle, and you realize, okay, you know what, this is a New York open, so there's going to be a lot of volume. So now we might see some action happening in the 4-hour candle. So then you're going to start to see the 4-hour candle move, and then there's going to be 9 a.m. hour, there's going to be more volatility, and then the last candle, now you have to see that it was volume in 1 hour, there's volume in the second 1 hour, so now maybe there's going to be less volume in the third one, right? Because this might be the closing of the 4-hour candle as well. Does the daily candle start at 000 GMT? Yes. You have to look at your broker and you need to see when it starts. Yeah. So that's the thing here with the 4-hour candles, right? So you really got to be cognitive of the time as well, because let's say if you're looking at the 4-hour candle between maybe like 1 p.m. and 5 p.m. when there's no volume, you might see that the 4-hour candle doesn't go really far. But if you're looking at the 4-hour candle during New York Open, then you know there's going to be volume in that 4-hour candle. So it goes back to the fact. Is it being recorded? Yes, being recorded. So it goes back to the fact that, okay, like what session you're looking at on the 4-hour candle, right? Because the more you look at it, the more you're going to start to understand that, okay, maybe the first half of the 4-hour candle wasn't as volatile, so maybe the second half might be volatile, right? So every situation is different. It's subjective. So that's why we encourage people to post charts every day of what they think is going to happen. And then, like, that's how you keep improving and learning. Okay. So let's move on to some examples here. Delete this. Oh, let's just do this. All right, daily versus 4-hour. Okay, so this is the daily chart, right? We see these candles here. This was a bearish candle. The next one was also bearish. The one after this broke out, right? So this would be your breakout candle, the one that broke out. So now when you're looking left, now since price is moving down, you're looking left to see, okay, how far can the price go, right? You're looking left and you see the supports, you're like, okay, maybe price can come up till down here, right? Any break below is bonus move. So let's look at this on the 4-hour and see how this looks on the 4-hour. Now you see how simple this looks? On the 4-hour, you're going to start to see more information. Wouldn't be 1300 resistance first? 13. No, because look at where this candle started. It started down here. So this was support. So it's going to come down till here. So we're going to look at the 4-hour here. Here we go. There's the 4-hour chart. Yeah. So I guess this is what you were talking about here, because now when you look at this information, we're going to focus on this information right over here, right? The daily candle came down and it pulled up, and the next daily candle, it went down to fill this wick. And the one after this pulled up before heading down. So this is the information we're going to look at on the 4-hour, and we're going to try to make sense of it, and we're going to try to study the market structure. This is what I do in my pastime, like when I have nothing to do. Okay? All right. So check this out. Daily candle, this was the move down. 4-hour candle went up, right? And then you have all this consolidation happening, but what you're looking at is that it's creating support on the 4-hour, right? It's creating support on the 4-hour. This wick down was the wick of the daily candle. This move down was the wick fill of the small daily candle we looked at. And then we had a pull up on the 3rd daily candle, and that was the one that pushed it down. But now we're looking at the smaller time frames. We look to see that, okay, the 4-hour candle actually broke the support. Even on a daily, we just see something like this. Let me just draw the daily candle here pretty fast. So on the daily candle, we see something like this. And then you have a candle like this. And then you have a candle going like this. There you go. A very bad drawing, but makes sense, right? So if this is the daily support, you can see the support forming very nicely on the 4-hour, right? right over here. So if you're a swing trader and you're taking entries based off the 4 hour, you're probably waiting for this support to be broken. Or you're probably expecting this resistance to be respected right over here for price to continue moving down. In a way, you could have taken the trade on the smaller time frames, like 1 hour and 30 minutes, if you're attempting to catch 15, 20 pips. Yes, that's true. That's absolutely true. So let's move on to the next example. What you're going to notice is throughout these examples, I'm going to be talking about a lot about candles because it's very important to actually know what the candles are doing. Let me just turn the volume down just a little bit. There we go. All right. Hope that's not too loud. Okay, let's go to the next example here. Okay, so we have another daily chart. So from this information, what we're going to focus on is we're going to focus on this area right over here. Like what's happening here. Now, if you're looking on the daily candle, on daily chart, it's pretty easy to see that, you know, price came down and the next daily candle, it pushed up. Yeah, it's the same songs every day. Yeah, these songs actually put me in a really, really good mood to trade. And you know, when they're playing in the background, I can relate to that trading day, and, you know, and I just get excited. I'm just, okay, perfect. You know, this is awesome. So daily candle pushed up. So now what you're looking at here is that, okay, when the daily candle pushed up, this means that this is a very strong price level, right? Because if the daily candle reverses an area, that means that has formed support, right? Because now when you look at this bearish candle here, it tried to come down, but it closed above that area. This daily candle also came down, but it closed above that area. So now it's created this support. On the daily candle, it looks perfect, right? It created this support. So once support is created, once daily candle couldn't break down, what's going to happen? It's going to break up, right? So you see it broke up here, and then it started to range a bit here. So now we're going to look at it on the smaller time frame, on the 4 hour, because on the 4 hour, now you will see more of the market structure. And then on smaller time frames, you know, that's where you try to take your entries. So let's look on the 4 hour. This is the 4 hour right over here, right? Oh, Smith is punching the keyboard. That's writing over there from Smith. Okay, so if you remember the daily candle that kind of went down like this, this was the move right here. This move down that pushed the daily candle down like this. And then you can see how this candle here, this 1, 2, 3, 4, 5, 6 candles made up that one bullish daily candle which we have. Is it? So it's always better to take into consideration the most recent broken zones rather than old zones? Yes, exactly. Because the most recent zones are going to be the freshest zones, right? That's where most rejections happen, on the most recent zones. Because now when we looked on the daily time frame, we had clear support, right? Candle was something like this. And then we had clear support on the daily. But on the 4 hour, you see more information here because the 4 hour candle had to come down and then the next candle went bullish. And if you know about fake outs, that next candle closed above the support it formed right over here. Makes sense? So if this formed above that support previously, this means, okay, the support is being respected and it should continue to move up now. So then, like, you had this next candle and the candle after this, it filled the wick. We're going to go over a lot more examples here later on. Right? Then overall daily time frame had respected support. So the 4 hour candles had to just, you know, jump around and continue the bullish momentum. One thing I like about this is that there are a lot of examples and we can cover all of the angles here. I tend to draw my zones for the week and leave them till next week. The market is always changing, so you have to adapt. Yep, that's absolutely true. Weekly zones, I keep them as it is, and I just like wait to see what comes. When those bear candles close near the bottom of the range, it doesn't mean sells. No, because overall, you're basically waiting for the daily candle to close then, if you're only looking at the daily and the 4 hour. See, you waited for the daily to close, it closed with a rejection. This gives you a nice idea that, okay, we could probably take buys to go up. And then if you're being cautious, you're waiting for this candle to close.